Hello everybody, welcome to your weekend edition of Trader Merlin. Hope you had a great trading day out there today. It's interesting, I've been bookended on both days, this Monday and on Friday, with losing days. Monday was a pretty bad one, today wasn't too bad, hit my stop loss and quit. But even with those two bad days, the Tuesday, Wednesday, Thursday, absolutely made up for it. Had a great week out there, which means we're back to good scotch, actually. I'm drinking a Monkey Shoulder today. It's a malts blended scotch whiskey. So cheers to everybody. Happy Friday. Thank you all for joining us this week and having a great trading or show this week. We had a whole bunch of great shows. So cheers to everybody out there. And those that don't drink, enjoy your coffee, Tomasina. One little thing that I find very entertaining and something you want to know about me if you ever meet me in person. When I lived in Italy, they always told me that there was a superstitious belief there. I'm not a superstitious person whatsoever in any way, shape, or form. I'll step on cracks. I will go out on a Friday the 13th. I don't care. I'm not worried about that stuff. But there is one that caused me concern when I lived in Italy, and that is this. There's a belief amongst the Italians, and maybe other countries as well, that if you cheers somebody with an alcoholic beverage, let's say I have an alcoholic beverage and Tomasina there has coffee. If you cheers an alcoholic and non-alcoholic beverages, the Italians believe that it's 7 years bad sex. So, needless to say, if I ever see you in public and you try to cheers me with a non-alcoholic beverage or we're not in the same boat, I'm not cheersing you, I'll high-five you, we'll do an air cheers, but I won't clank the glass because there's one superstition I just don't want to risk, and that's that one. All right. Cheesy humor out there for the day, but it's true. That's cheers to that one. All right, yeah. Big Eb. You're like, Big Eb's going, man, that's what happened last year. All right, let me start off with a little bit of a market update today. We're going to have some fun on today's show. I have a new segment I'm going to be bringing you guys just out of fun, just because I want to have some fun on the show. But we'll start with the update. A couple things happened with that update. Number one, we had earnings today, but none of that was really that important. You look here at the earnings announcements. You had Verizon, which thank you for making my cell phone not work in my office. That's amazing how that works. You had Sanofi, you had Total, Sony Corporation, and American Express. The one that's noteworthy there for me was really the American Express one. I mean, they had a pretty good beat on earnings. There was 17% surprise. They were supposed to come out at $1.98. Estimate of 169. They came out at 198. So there you go. A nice beat out there. Really, earnings, guys, it's all about next week. Next week is really a huge week. At the end of today's show, I will let you know all about that one and let you know what are the major ones. But I'll tell you what, if this was a popcorn trade of the day, this will be the popcorn week of the month because there are so many major names that are going to go absolutely crazy next week. I'm pretty excited for that one. So that was your basics, just major earnings announcements. Other than that, we can take a peek at our markets. If you look from the top 10 or top 7 perspective, that 10-year Treasury yield. What am I looking at? I'm looking at all kinds of crazy stuff out there today. Let's just, we'll do it in order. I'll go from GC. The 10-year yield actually was dropping a bit, down 2.77%. We're getting close to that 0.5 on the 10-year. That will be a very noteworthy moment when we get there. I'll bring up gold. Here is your GC futures contract. This is a date. Nope, that's not GC. That's corn. GC is what I want to look at. Here we go. Here's your gold on a daily. We can see that COMEX continuous contracted gold been steadily going up. We're back above that 1700. Even though today was a down day, you're still at 1745 for that futures contract on gold. That was a slide of 0.13, and that was pretty much your only negative one on the day. Everything else gets nice and positive at the ES. This is where I took my losses today. I was actually shorting going into the close, and just the strength just kept on going. And this, by the way, is the first weekend in a while where I'm not bringing home anything. There you go. I didn't take any positions home over the weekend. I think what we're going to end up seeing probably in the next couple days is a statement from our president saying, look, we can all get out of this quarantine and go back to work. Let's get the business economy going. And I think you're going to see a nice pop up in the markets. You know, we could see 29, maybe 3,000, even 3,100 on the S&P before it starts the realization that things aren't going to be flipping that switch. It's kind of like the equivalent of be turning on a dimmer, right? You can start off real slow and get up maybe to full brightness, but I don't know how long that's going to take. So that's the major reason why I didn't take overnight positions this weekend. I just can't for the life of me buy long right now, and normally I'd be going into the weekend short, but just didn't want to do it this week. What else we have? We have 1.39 for the S&P. For the Russell, which would be your at RTY, you're looking at gains in the Russell of 1.56%, which was great. Bitcoin was up 1.57% as well to 7,500. Not too shabby. NASDAQ, rounding it out here with the NQs. Technically, there really isn't much to speak of. I was actually thinking we might see a down day tomorrow or today because of the way we finished, but just had good strength, and you can probably see that on the chart there. Up 1.65% for the NASDAQ composite. But again, the top dog, the main story is crude oil. Here's your crude oil chart. And again, this doesn't really look that crazy from a percentage gains perspective, but I always like to look at the actual numerical gains. I do think I have it on Snap here. Let me put this back on Snap mode so we can see exactly how much we've moved up. I know this sounds crazy, but we're up 167% off of those, 164% off the lows that we saw in crude oil just 4 days ago. So this brings me to another, and by the way, that's your top 7 markets out there. So we wrapped that one up real quick. This brings me to something I've been wanting to do for a while. Now, years ago on Power Trading Radio, I did a segment called The Donkey of the Day. And the point of that was not necessarily to single out somebody, but generally there's something going on in the market that's so stupid that you just have to look at that person or that institution and go, what a jackass. You're a total donkey. Why did you do that? So I had my designer, we'll thank Tim for the graphic and TJ, the chart master, for adding some audio to this, for a rare segment that you'll see on Trader Merlin here, which is called The Donkey of the Day, complete with audio, visuals, and everything. So, your Donkey of the Day is an interesting one this week. Why is it interesting? Because there comes a point in our lives and everything that we do when you wait your entire life for something. Whether you're waiting for the perfect woman to come along, you're a surfer waiting for the perfect wave, you're a fisherman waiting for the perfect fish, you're a storm hunter waiting for the perfect storm. There's always something, and everybody in the room, what are you guys waiting for? Is there something out there that you're waiting for, like the perfect something? I'll give you an example. Let's say you're use TJ as a great example. So TJ is a professional surfer, for those of you who don't know. TJ is a very accomplished surfer. He's won all kinds of championships for longboarding. And imagine, he's been waiting his life for the perfect wave. And right now on the media, they're showing TV pictures of this wave, and it's like, this is the perfect wave. But he can't go out there and do it because of the quarantine. They will not let him go on the wave and surf, which, let's be honest, who's 6 feet, within 6 feet on the wave anyway? It's just idiocracy. So sometimes there's something so stupid that prevents you from finally getting to that dream that you always wanted. Now, I would make the argument that what we saw in crude oil over the past couple days and past week, the past couple weeks, has been legendary. The stuff of lore that we'll look back and go, can you believe when freaking oil dropped to negative $40 a barrel? Are you kidding me? This is, the stuff that dreams are made of. So my donkey of the day goes to none other. They'll probably hate me for this. They won't be sponsors on the show, I'm pretty sure about that. It's the Chicago Mercantile Exchange. You're like, what? The CME? How could you single out the CME? Well, I'll show you how I'll single out the CME, because you got to listen to this comment here from the spokesman for the CME. And he says, and I quote, the CME group accommodated negative futures prices on April 20th so that clients could manage their risk amid dramatic price moves, while also ensuring the convergence of futures and cash prices, said CME Group spokesman. So I have to call you a jackass, because basically what you've done is you've broken a fundamental belief system in the marketplace, something that every single one of us uses as a backstop for risk management, which is this. If I ask any single one of you, how low can this security go? The answer is 0. It should always be 0. You're going to go down to 0, and this is no longer worth it. Anything. But for some reason, the CME let this happen where it was negative, like literally going the opposite direction. So on Monday, at a certain point, you'd have to pay someone to take barrels of oil off your hand, which is amazing. I call that absolute jackass, donkey of the day material. I'm hoping that at some point this actually changes, because to me, it casts doubt on the validity of our markets. As I go long on an asset, I'm using that 0 as a backstop. It can't go any lower than 0. But can it? We saw it on Monday. So now it begs the question, let's say we have a biotech or a pharmaceutical company that misses FDA drug approval. Now, can that share price now go negative because all the debt on their books? Does debt now count as a negative factor for these things? I don't know. To me, it's a crazy market time. It's a bizarre thing, and I just had to throw in the donkey of the day as your Chicago Mercantile Exchange. So there you go. Bear with me. I'm hoping to get more donkeys of the day because there are plenty of them out there. There's a lot of things that just don't make sense in the financial marketplace, and what happened on Monday just didn't make sense. There's actually John Rowland, who I'm going to hopefully have on the show here soon, on his Facebook wrote a great thing about, for layman's terms, to understand how it works. And if you want me to read it to you, I can read it to you guys. It was actually very, very comical. But if you don't want me to take the time, it's fine. It's one of those things that it allows you to understand and relate kind of so somebody who's not an oils trader, they would get it out of this one. All right. Let's see if I can find it. Right, Jay? Right? It's Austin. The cheat code for the CME. Maybe. That could actually be the cheat code for the CME. All right, let me see if I can find this. I want to, because I could paraphrase it all for you guys, but I wanted to read it as I saw it, because it was just one of those things that it should be read as is. So bear with me just 1 second as I find it. I think Steve Moses had it on his. It was just a retweet of it, and it was really, really good. If I don't find it here in a second, I will make sure I very quickly move on. And yeah, here it is. All right. Okay, so I'll pull up the chart of crude oil here so you don't have to stare at my ugly face looking off the side of the screen. Here's the chart of crude oil, and I'll read. This is John Rowland, who, again, is just a great commodities trader. I'll bring him on the show. He says, why West Texas Intermediate crude oil traded at minus 37. By the way, it actually went down to minus 40. Imagine the following. You pay $500 today and commit to receiving an escort at your house in 15 days because your wife is traveling. This is called a futures contract. Unfortunately, lockdown came and your wife will be home for the next 60 days. You do not want this woman to show up at your house at all and try to pass this futures contract on to someone else. Only you cannot sell this commitment because nobody can receive the escort at home anymore. Everyone is in full storage with their wife. To make matters worse, not even the pimp, the Chicago Mercantile Exchange, has any more room to receive girls because his house is already crowded with girls. So you will pay anyone just to take the girl off your hands. Do you now understand why oil has a negative price when the contract is delivered? Now, I know that that's maybe a PG-13 example, but I thought it was great because for someone who doesn't understand markets or crude oil, I thought that was a very good explanation of it. You're stuck with an asset that you might have wanted, but now all of a sudden you don't want it, and there's no way you can unload this thing. You're literally going, I will pay you to just make this problem go away, right? Just make it go away. So anyway, I thought you might find that entertaining. All right. Yeah, AVP says now you have to say it. Natalia says, what a fun time to start trading. It is and it isn't, right? There's a challenge here that I really struggle with. It's an inside dilemma I have because for someone like myself who's done this forever, this is that moment that you've been waiting for. I mean, I had moves like this back in the late 90s and in early 2000s. There were moves exactly like this. But seeing the percentage moves in oil and some of these other markets like the S&P, some of the great percentages, have been just amazing trading opportunities. And now it might not be a once-in-a-lifetime opportunity. It is something that we'll see multiple times in our lifetimes as traders, but when they're there, no one should tell you you cannot trade. And I'll tell you what, it was very tough for me to pick the donkey of the day today as the Chicago Mercantile Exchange, because when I step back and I think about it, and I don't want to make any, please, because I know I'll get some hate mail from here, but the idiocracy of the statement that was made by President Trump today, which insinuated injections or ingesting Clorox products or bleach products to kill the coronavirus, it's whether it was a joke or not is just idiocracy, because you cannot tell people that, because there are so many people out there that will listen to that and immediately go home and start taking shots of Clorox. So to me, that could have been a donkey of the day. The other one I was going to say would be the exchanges or the Chicago Mercantile Exchange for not allowing us to trade these things. So I did the CME as being the number one because they let it go negative. That's just stupid. But what about Ameritrade? What about TradeStation for all of a sudden going, you can't trade crude oil futures? you can't even trade USO, UCO, or anything to do with crude oil. It was basically like a big from your broker today, or over the last few days. And I'm like, you shouldn't be able to tell me what I can and can't trade. If people are foolish enough to make trades and lose all their money because they don't have good risk management, that's on them. That's part of Darwinism in the financial market. So it was a tricky trifecta there for me to choose from, but the CME went out today. All right, let's see. Let's go to, all right, so the market did okay today. I want to go to a couple Q&A pieces here. There was some stuff that came through that I want to make an attempt to get to. I know we've had a ton of other topics come through. This one is going to be gratuitous self-promotion. Arvin asked me, what method of watching your program provides the most benefit to me? YouTube is great. I could have done this on both YouTube and on Facebook, but I chose to just do it on YouTube to centralize an audience, which I think is still the wise choice. I will continue to do that. So obviously liking this and subscribing to it and putting comments down below. The other piece, which ultimately would probably help me the most, I know it's a bizarre one, is iTunes podcast. And I'll tell you what I do. I know this might not be right, but I'm in an attempt to start something from the ground up with zero marketing budget. We've done rather well. I literally go to the iPhone here, and you can see there's a button right there that says podcast. So I go to podcast, and since I have unlimited data with Verizon, I literally just play each show. And I play each show, and we're taking some more risk. But there it is, playing, right? Well, I'll just put it down on mute. And since I have unlimited data, I let it play in the background. So my goal is to get up to a level where I start to have more visibility on iTunes, because Power Trading Radio is still in the top 10, and they haven't done a show for 2 months. It's because Power Trading Radio started a decade ago when no one was really in the podcasting space, and they solidified a spot up in the top. I want to get to that point. I feel like what I was doing with Power Trading Radio was pretty good. We didn't have any marketing support, zero marketing support. It was embarrassing with Power Trading Radio how little marketing helped us grow that show. Gary Christmas, TJ, myself, Tilly Allison, Mike McMahon, all the guests that came on that show is what made it what it was. And I want to get this to that point and kind of eclipse that. But I got to get up in those top rankings. Right now, if you go into iTunes and you do a search for Power Trading Radio or TraderMerlin, you'll find it. But it doesn't show up on the list automatically as being in the top 100. I got to get it there. So there you go. And also, Natalia says, and also leave a review on the iTunes podcast. That's the best way you guys can help me out. I obviously appreciate everything you've done so far. Hitting the like button, subscribing, that's awesome. And obviously, those of you who are sharing it is amazing. So thank you so much for all that you've been doing for me. I feel sometimes like I'm groveling for support, but I appreciate it. All right, next question. And this was an interesting one. And Karen, it's a mea culpa, really. I can't really say much here. She sent this one in on Monday, and I didn't get a chance to get to it. I've been so busy with so much other stuff. It says, with the price of oil today, I'm looking for your suggestions as to what either stock or options thoughts you have regarding the extremely low price of oil we have today, April 20th. I appreciate your time and consideration of this question. I am open to active trading ideas and long-term hold thoughts. My thought with crude oil, and my dad is trying to get me to get him in as well. I want to get in long on crude oil. Now, all of a sudden, now we're back up at $17. When it was down at $7, I'm trying to buy and pull the trigger to just get into CL. I couldn't get into the CL futures because my wonderful platform said you can't do that. So that night, I actually went in and I bought UCO, which is the double long. I'm not a big fan of USO. The mechanics behind how it's constructed just are shady to me. The futures contracts that they're using, I don't know. I just don't trust it. UCO is actually benchmarked against an index, which is a little better, but it's also double. So, I told you guys on the show, I bought 8,000 shares. I think that was on Tuesday. The next morning, I dumped it because I just didn't want to look a gift horse in the mouth. As much as that thing moved, in just a couple of hours, I'm pulling down a pretty nice 5-figure day. That was great for me. Everyone loves to have those types of days. In hindsight, should I have kept it and rode it all the way up to 19? Yeah, I should have. And maybe I could keep that for the next 3 or 6 months. But I'm more of an active guy. I wanted to be out and lock in a profit. So for Karen, what do you do now that oil's at 17? It's tricky. Especially if your broker doesn't allow you to trade this, right? So we'll go take a peek at crude oil here. Crude oil right now sitting at 17. I'm looking at this, and part of me, I know this sounds odd, part of me actually believes you're going to see a little bit move down here. Why? Just because I feel like people are still worried about it. We're still not out there moving around. I think that what you had with this big sell-off was a liquidity issue. not a fundamental issue. So basically people were trying to unload this crude oil and there was nobody out there, and that's why it tanked like this. And people were just spread with the fear that the media has been giving them, and all of a sudden you saw this crater. Could it go back down and challenge that $10 mark? I believe so. I believe you could see it get back down to that $10, $12 mark. At that point, I'd be very happy to buy some longer term stuff. The question is, what do you do? Do you go out there and buy crude oil futures? Do you buy options on the futures? Buy some call options on it? That's probably what I would do, because I want to use the power of leverage. I would use options to get into it, whether it's going to be on CL, a little bit iffy, or you buy something like USO or UCO. Well, I think UCO would probably be an okay thing to do. I hate to even sit there and promote a double, leverage hedge fund ETF. That they're always scary for the interim and longer term, but I do think you'll see crude oil back up at that $25, $30, maybe even $40 mark here in no time once we get our feet back on the ground and the economy open and people moving. Do I see it at 50, 60? No, I think 40 is probably a pretty high target. 25? Sure. I think that's going to be no challenge at all once we get back to moving. So that's how I would play it. Yes, Chris, this is not really expensive. It's Monkey Shoulder. Monkey Shoulder is the bourbon of choice today. It's funny, on the Facebook page, they were asking me to show a picture of my collection, so I posted a picture of the whiskey collection, by the way, so there you go. All right, what else? Jonathan says, what happened in PTR? They just stopped because of what's going on with Online Trading Academy and the FTC right now. There were basically everything had to come to a halt real quick because of the FTC's demands. So unfortunately, that one got put on hold, and I just looked at it from this perspective. I love doing this show. I love having the interaction. I like having a voice, but I really don't want to be much of a pundit. I want to share my viewpoints on the market, share my experiences, because I've been doing it for 20 plus years. And if I can help anybody understand better how the markets work, maybe even create a fun environment, because I think we've got a pretty darn good community out here that's getting bigger and better and better. I love it. To me, that is the joy of doing this. I'm not making a penny. You guys probably saw that I monetized it the other day. So I turned on a switch that allows monetization. If those ads, did you guys see an ad today? I think you guys may have seen an ad today. Yesterday, I know you did. I hate ads. I despise them. And I'll let you know, if I look at the monetization, I'm only going to get like 2 or 3 cents a show for having an ad, I'll cut it. I'm not going to have that. I'll hopefully I'll get to the point where the show is big enough where I can actually have a sponsor who sponsors the show, and that will help me offset some of the costs. Cool. Yeah, I did see an ad today. Huh. Well, I hope it was a good one. Let me guess, it's probably for some other trading firm. Love that one. All right, so that's the thoughts on crude oil, Karen. I know I'm late. I wish I would have read that one earlier in the week, because you probably wanted to buy it a while ago, not right now. Next question. Okay, and I didn't even prepare for this, and I really need to be more prepared on this show. I tell you, this is what happens when I start thinking about whiskey. I was like, oh yeah, I just have my whiskey prepared, and I don't need to get too prepared for the show. Yeah, I guess I should have been more prepared. Okay, Ivan says, I understand that when options are expensive, that VIX is typically high, it's best to be selling them. Correct. And vice versa. A low VIX means you generally want to be buying options. I'm going to really kind of be careful there and not say always, right? Always is a really dangerous word to use. So we'll say generally, when you have a VIX that is very low, VIX is low, time to go. VIX is high, time to buy. That's kind of the way that you look at the mantra that has been used forever with regard to options. But what is a high or low VIX? Past what number would you consider buying or selling? So I think you actually have it backwards here. So let me look at the screen, because I think that it's worded incorrectly. It says, I understand that when options are expensive, right? So when options are really high in price, generally you have a high VIX. Okay, that's correct. And we are looking at selling options. So yes, your wording is correct. I was wrong. You are looking at selling options when VIX is very high, generally, because the premium is so much more. If you look at the trade I made a couple weeks ago, actually a month ago, on United Airlines, that was a great trade on United Airlines. And I ended up making a 19% rate of return for 1 month. I sold puts, committing myself to buy it at $25. I've actually been looking out there for other ones out there, because there might be some. I actually tried to sell some puts today on Chesapeake Energy, CHK. I had a standing order to sell the 27 puts at $3.50. For 1 week, I was going to get $3.50 for a week, because the volatility is so high on that. But it's not just the VIX, right? So a lot of times individual securities will not adhere to VIX. They're going to do their own thing based off their own internal volatility. But if you're looking at something like like the S&P 500, then yes, the S&P 500, that's what these VIX options are on. So let's say you're trading the ES futures contract, and you all of a sudden have a VIX that spikes up to, let's say, 50. Remember, the mantra says when VIX is high, and I'll actually bring up a chart here. Let's use our current markets as an example for this one. So bear with me as I bring this up. Hopefully you guys can all see that. So I'll put a little line right above 50. So you can see where my cursor is. Unfortunately, it's going to the close. So the 50 is right where the cursor is, but that horizontal line is just going slightly below it. So the mantra is, if VIX is high, it's time to buy. What does that mean? That means that VIX has been oversold. The VIX has sold off a lot. That the markets have sold off a lot. So if the markets are very oversold, that means that people are panicking, right? That's when VIX really starts to spike up. So when VIX is high, time to buy, meaning start buying equities. That is a recipe for disaster. I don't use VIX anymore with regards to that mantra because of what happened in 2008. We were almost at 100 on the VIX back in 2008. We almost reached it again here in March, where VIX was spiking up to, what did we get to on this one? I don't even really follow VIX much. At 83. So what are those lines? That was the question that Ivan asked. Normally it was between 20 and 40. So a VIX down below 20 meant that markets were moving up. Right? VIX is low, time to go. I mean, the markets are moving up. You probably want to get out at a certain point. And that means that there's not a lot of fear. The fear gauge has really subsided. Those numbers are old. When I started, it was 20 and 40, meaning if it's above 40, VIX is high. If it's below 20, VIX is low. Those numbers stretched a little bit. To me, you could almost take the low point and go to 10. And historically, let's go back and look at the max here. You can see, oops, sorry, let me show you the chart. You look at the max here. This goes back into, let's go there. I want to show the 2008 as well as ours so we can see kind of how this lines up today. Come on. There you go. So we're still not up to those highs, but you notice that the maybe 15, look at the average and kind of figure out where has it not gone below. So 12. I think 12 might be a good point. Right? You can see very few times it's actually gone below 12. It certainly happens. Seems like it happens a couple times a year. But remember, we've been trending strong since 2009. So there should be a lot of moves below 12, meaning that the market has been moving higher and higher and higher and higher. Now, if we use the old adage of 40, which would be close to there. I'm trying to get this line to stick. It's snapping. All right, we're close to, gosh darn it, stop moving. Ugh. Okay, there we go. The old adage, when VIX is high, it's time to buy. If you were a buyer when this thing broke above that 40 mark, you were actually probably did fairly well because the market started to bounce from that point and looked rather good. But I believe that there's a flaw with this. And that flaw is when you say that VIX is high, it's time to buy, and you're out there and you're going to be selling options, great, you're going to be collecting more premium. I wouldn't do it arbitrarily to just sell options because VIX is high. It's about the individual security or what you're trading, like the market, for example. If you're trading the S&P, okay, let's look at the charts. Let's look and see where are our supply zones, where are our demand zones, and where might this thing go to. Don't just feel you have to sell options because VIX is high or buy them because VIX is low. To me, that's a problem area a lot of people fall into, is using that mantra, which I believe is old school. Did I not share it? Oh, sorry. I thought I had it shared. Sorry, guys. There you go. Oh, I talk about my losers all the time, Austin. I think talking about your losers is the best way to grow as a trader. Absolutely. Okay, so there we go. Sorry, I thought I had it up there, but I was on a little bit of rant. So let me put that cursor back there so you guys can see that one again. Here's that 40 mark. It just doesn't want to stay. It's driving me crazy. There you go. That horizontal, that dashed line is 40. And the old mantra was, again, when VIX is high, it's time to buy. So people who followed that mantra would be buying the market just because it was above 40, and the market continued to fall a little bit, right? It kept dropping and dropping and dropping. So to me, it's a dangerous thing to use the VIX for that. But yes, as a whole, as a mechanism, Ivan, you are correct. You are saying it's best to be selling options when VIX gets very high because people are scared, they're freaking out, so you want to be collecting premiums. When VIX is very low, you're more looking at buying. You're looking actually buying options because the premiums are so cheap. So I would use, let's say, 40 and 12 would kind of be those lines in the sand there for that one. Cool. Okay, And if you guys have any questions, feel free to send them on in. I'm just kind of going through some stuff I didn't get a chance to get to in the past, so we'll try to catch up. All right, this is a great one. With the reverse split of ACB, would it be worth shorting? All right. So this is a tricky one because you have to understand the mechanism, again, of shorting, or reverse splits, excuse me. So what's happening with ACB? This is Aurora Cannabis, Aurora ACB is Aurora. It's a cannabis company, and the problem is their price has been falling and falling and falling and falling. And part of the rules of the different exchanges, there's certainly different rules for different exchanges, is that when price goes below $5, if it stays below $5, I believe for 30 days, it now starts a delisting process where it could be removed from that exchange. So of course, Aurora right now does not want to be removed from the NASDAQ. Being on that NASDAQ is pretty. I think on that there might be. Let me check here and make sure. There actually might be on the NYSE. So let's go ACB. Here is your ACB chart, and this is doesn't tell me the exchange. Three letters is typically a New York Stock Exchange. Typically. So you look at this thing has been down for more than a month below this $5 mark, right? It's been down there a long time. So they are in threat of being delisted. It's been there for several months now. So they're going to do what's called a reverse split, which means the way they're splitting it is 12-to-1. Meaning for every 12 shares that you had or have, you will get one. So it's an odd number. Normally they do like a 2-for-1 or a 3-to-1 or a 5 or a 10, but for some reason they chose 12 as their breaking point. So that'll put Aurora Cannabis or Aurora Cannabis probably, let's see, if you do a reverse split at $12 times 0.73, yeah, sorry, I'm math in my head. It's the whiskey that's making my numbers not work so well. So 12 times 0.73, it'll put about $9 stock, $8.76. Of course, it's going to happen in a couple of weeks. I believe it's May 11th. So you don't really have to worry about it yet, but would you want to short it? And it's an interesting question because I look at this chart and it definitely looks like it is stabilized, right? I think we could all look at this and say it looks like it's stabilized. Of course, it's pretty much at zero. There is a belief that when people are trying to buy into reverse splits and things like that. So I personally wouldn't short it. I think it's already low enough. I look at the chart here of Aurora, and what makes me concerned is, let's go weekly, is how far this thing has come down. They're obviously not a fly-by-night company. They have infrastructure. They have assets. So at a certain point, this will get bought up by a bigger fish. That's what's going to happen with most of these cannabis companies. It's just the same thing we saw in the dot-com bubble. A lot of brokerage firms popped up, and all of a sudden they would struggle, and boom, they got consolidated in. And you saw a ton of brokerage firms go into one of three companies: Charles Schwab, Ameritrade, or E-Trade. I see the cannabis space in the same vein. You're going to have a lot of the big fish out there swallow these other ones up because they have the resources and capital, and Aurora might not. So I don't know if I would be comfortable shorting it, especially since it's already gone from $10 down to 73 cents in a period of 1 year. I don't know. I'm not on that. I wouldn't feel comfortable shorting this one. I don't know. Would you guys want to short it? If it jumped back up to $8, $9, feel like shorting it? Even at $8, what's your profit margin potential? You going to ride it all the way to zero? I don't know. I have a hard time shorting stocks that are under that $10 mark. Just a personal thing for me. Let's see, move on. Yeah, I would probably move on to something else that gave you a better probability. Now, if this, okay, it's a good education point here, because if I look at this chart, and let's say what's going to happen here, when they do a reverse split, guys, you're not going to see a candle that goes all the way up here to 8. This whole chart will shift. It will still be a giant downtrend. Now, if it's up at the $8 mark, right, and this whole chart is now shifted, and Aurora runs up and hits whatever this supply zone is right here where you can see my cursor moving, I like that. I may actually go short there, but I'm not going to short it just because of the reverse split. Right? I would short it because I'm joining a downtrend at some point. I'll try to make a note to myself to bring up this chart again once they do the reverse split so you guys can see it and understand it. It's very different. So for example, if you look at UCO, I believe UCO did a 25-to-1 reverse split. You notice there is no jump. Let's show you my trades on this one. This is the beauty of trading, guys. That little move right there, this move right here from this blue dot to this blue dot, which doesn't look like much, was $29,000 profit. It's weird. It's like, what if it went up to 55 or 75? I mean, that's a crazy move. But it did a reverse split, but you don't see, it didn't jump up 12 times its value, right? It smooths out the whole chart. And if you look at the price scale, UCO was never at $550. It's just the way that the reverse split is calculated. So be careful there. So yes, reverse split, I would go back to the question and say it's not a reason to go short just because ACB is having a reverse split. I certainly would not encourage you to get into that belief system, just shorting something because it's having a reverse split. All right, last question here, and it's going to tie into your earnings announcements for next week. Joe, hello Joe, says Apple, Microsoft, Alphabet, Amazon, and Facebook now account for 17.5% of the S&P 500. That is ridiculous to have that much power. It says, with tech stocks weathering the storm well, does this give you any pause in your opinion that the rally is just a correction of a downtrend? It doesn't give me pause, it gives me concern. I'm always fearful in anything in life where you have a few people influencing the greater good. And not that the markets are the greater good, I hope you guys understand the analogy here. I'm looking at 5 or 6 stocks, our FANG stocks, if you will, that have so much power, not just on the S&P, but on the NASDAQ for sure. Even the Dow, they have some pretty good clout. Not as much as the other indexes, but there's so much control and power there that should something dramatic happen to one of them, there could be massive implications for the market. Now, what's interesting about Apple, Microsoft, Amazon, and Facebook is they have been bellwethers. They've been dragging this market up. So let's show you some charts of those companies specifically. And I'm doing this on purpose because next week you have earnings announcements coming out from almost all of them. I mean, you have major earnings announcements happening next week to the tune of Google, Microsoft, Facebook, Apple, and Amazon, all those companies he just mentioned. And if they're that heavy in these indexes, we could see major swings next week. So let's go look at the first one here, which is Google. Okay, Google surprisingly took a pretty large hit during the coronavirus thing. I would not have expected that because Google it's online. You're still down about 16%. Just to put it in perspective, let's go see what the overall market is still down right now. Right now, you're looking at, one sec, get that pin there. I'm going off the absolute high to where we are right now. Market's down 16%. So Google is pretty much lockstep. I mean, almost the same picture, which is strange to me. I actually would have thought that Google would be making highs. And at a certain point, more people are going to be spending money on internet advertising and search advertising. So Google, not the best. Microsoft. Here's your Microsoft, looking great. Now, of course, going into 2020, it was on an absolute tear, but it's only down from its highs in February to where we are right now. It's 8%. So weathering that storm a little bit, looking a little bit better. What about Apple? I actually thought Apple would be doing much worse because of all the issues with China. The difficulty of them getting products, down 13%. So it's better than the overall market. And the last one will be Amazon. Oh, no, I got to do Facebook too. Here's Amazon, which to be expected. I mean, this should come as no surprise that Amazon is actually doing better because of what we saw. They are up 10%. With all that's going on, I thought that was pretty awesome and pretty predictable because most people are shopping on Amazon. I thought eBay might actually be doing well too. I haven't even looked at eBay recently. Yeah, eBay's, dang, it's one of those ones I know I just should have bought. I've been buying everything on eBay because Amazon is limiting what is delivered. eBay, it's just showing up. And the final one here was going to be Facebook. Now, Facebook, I guess you could throw them in a similar category. I'm going from the peak here in February when the markets really started to slide. And Facebook is down about 13%. So most of these are performing better than the overall market, which means they're the ones that are bringing it up. If we were to bring up some of the other guys, they are going to be pulling the market down. So it's great that they're leading. It's great that they're powerful enough to weather this storm and bring these markets up. But it has to make you wonder, if I'm looking at the S&P 500, and out of the S&P 500, I'm looking at 5 companies that represent, like, say, 18% of it, what about those other 495 stocks? They're not all doing well. Some of those are going to continue to pull this market down, and if they do, which I do think some of them are going to pull this market way down because they just won't be able to survive in this climate, you're going to see that slowly pull these indexes down. And it's a question of what's the straw that's going to break the camel's back with regards to Facebook, Amazon, Apple, Microsoft, etc. It's a challenge. It does usher in an interesting point as to the concern that we should be or that I have, that I think we all should have, because it's a little bit fearful. But I'm not losing sleep over it. Remember, as a trader, I try not to get myself too worked up on all those details. The thing that we have to understand is the market is what it is. It's going to give us what it gives us every single day. And we might not agree with it. It might not make sense at all, like negative $40 on oil, but it is what it is. So the more that I create a real heavy bias towards something or an opinion about it, it can skew my investment decisions. And it still does it even after doing this 20 plus years. I'll formulate an idea that this is going to happen for these reasons. And sometimes I'll get a little too adamant about it. Good news is I put stop losses in place so that I don't get smoked. I'll try not to let my ego get in the way and say I can't be wrong. I'm happy to admit that I'm wrong all the time. So anyway, those are your basic questions. I got any other ones? It's your time. Best trade I ever did was not buying VFF. There you go. Sometimes the best trade you can make is actually not making a trade. It's funny, I had a friend of mine, who will remain nameless, who had connections, right? He way up in some corporate company, and they were reporting earnings. And we were on the same trading floor, and he comes up to me and he's like, hey, dude, I got some insight on this company, man. You want to check it out? They're going to blow out earnings. I mean, I had lunch with the CFO. I know the CEO. They're going to kill it. So sure enough, I did not buy it. I for some reason, I had this idea in my head that that's insider trading, and I'm like, I do not look good in a pinstripe jumpsuit with a guy named Bubba as my cellmate. I'm a small guy. I'm not going to do so well in jail, so I'll stay safe. He actually did buy some, bought a bunch of it, and it went from like $80 down to $20 in a period of 2 weeks because they beat earnings. They blew out earnings, but they lowered their forecast. Thanks for telling me that one, CFO and CEO. So yeah, always be very, very careful. No, Chris, I'm not saying the name. They still remain innocent. They took enough financial losses that should embarrass them for the rest of their life, but yeah. Okay, any last minute questions coming through here? Anybody else? The conversation with Bill Henry yesterday speaks to this question. I was wondering the same thing with tech stocks going so strong. Yeah. It's not, and remember, it's not just tech stocks. There are other things out there, and this is really why it's so important to do your due diligence and research. So most ETFs that you buy, exchange-traded funds, are a balanced portfolio of securities. There are some, however, that are extremely weighted one way or another and really give way too much credit to a specific company. Let me give you an example. I'm typing it in here real quick, so apologize. I'm trying to talk and do this stuff at the same time. Let's see. I want to go to ETF, portfolio composition. And I'm bringing up, basically what I'm going to look at now is the NASDAQ 100. Because here you have an index that you would think by buying it, you're going to get a diversified mix of investments of 100 different companies. And while that is true, you are getting 100 different companies, the weightings in there are skewed. And I'll show you that right now. So I went to, this is Yahoo, and this actually was a good point that was brought up from a viewer the other day. Be careful where you get your information from. Yesterday, or when we had Bill Addis on the program, we were looking at some bond funds on Yahoo that actually had incorrect information, and it was a good catch by one of the viewers. He said, look, they're actually in government bonds, not AAA. So anyway, always check. So let's go to the full left here. Just look at your top three holdings. Microsoft is 11%, Apple's 10, we'll call it 11, and Amazon. So basically you have close to 32% of the, or actually close to 33%, of the weighting of 100 companies is done by 3 stocks. That's bad, right? It's dangerous. And some of these also, you might look at an ETF that's in the semiconductor space, or an ETF that's in the utilities or pharmaceuticals or healthcare. Wherever you're looking, always check and make sure, because when you start to get these really skewed ones, you got to be careful, because again, next week, Microsoft, Apple, Amazon are report. Look, these top 5 holdings here: Google, Facebook, Amazon, Apple, and Microsoft all report earnings next week. And they're all the number one, top 5 rating holdings in here. Keep in mind that Google one is split into 2, so it's really 7%. So you're looking at 40% of the value of the weightings of the NASDAQ 100 report earnings next week. So knowing that, what do you think could happen next week? It could be an absolute shit show. It could be crazy volatile. One of these guys misses expectations, and all of a sudden you can see the NASDAQ down 4 or 5% like that because of its weighting. So anyway, careful out there. This happens next week. I'll real quickly show you a calendar here, because I had an economic calendar, or earnings calendar. I didn't bring up the economic calendar. I should have built that one for you guys as well. Here is what's cooking for Monday the 27th, earnings-wise. You've got Canadian National, you've got Keurig, It's so weird that the company's name is Keurig Dr. Pepper. I found that one very, very interesting. Big Eb says shit shows work well these days. They do. They're opportunity, my friend. NXP Semiconductors, PPG Industries, Alexia Real Estate, CMS Energy. They're reporting earnings on Monday. Boring. Who really cares? The more important thing is who's going to be reporting later on in the week. I'll make sure I remind you guys when that happens. But Tuesday after market close, you got Google. Wednesday is Microsoft and Facebook. Thursday is Apple and Amazon. Hallelujah, hallelujah. I mean, that's the monster of earnings week coming out next week. Why is Google split into two? One of them is preferred shares. So one of them has voting rights and one does not. When they did that weird little split thing, they wanted to create certain voting shares, shares that you can actually vote and shares that you cannot. It was a weird thing that they did, but that's why. What else I got? You mentioned that you are a pattern trader. Can you expand on your application combination? I think, Chris, I'm going to have to do a separate show on that one. It's time for my afternoon hike with my boy, so I got to go for a hike here. Did the discount code ever... Yes. Oh, sorry, guys. I talked with Bill yesterday. I apologize profusely for having that issue. For those that wanted those books, the coupon code does work. He said a bunch of you bought them, so cool. Enjoy. Those are pretty for the price you pay. Those are some pretty darn good books on the market. So you can find out more information there. Let me see if I real quickly for those. I had it up here. I'm going to see if I can bring in the PowerPoint because I put it in a PowerPoint to make it easy for everybody. And I think I can show you that right now. Let's go to this one. Okay, so here you go. For those that might not have made the show yesterday on Tuesday or Wednesday with Bill Addis, he is the editor for these three books: it's Derivatives, Equities, and Fixed Income Investments. I read through the derivatives one. I really like it. I'm working on the fixed income one right now, but if you use this coupon code, you get all three of those books for $25. It was a package that Bill wanted to throw out there for you guys, and I thought, well, you know what? I'd love to share that with everybody because you can buy like these books individually for anywhere $15 to $25 on Amazon. So why not give all three? Anyway, there you go. Okay, cool. Let me make sure I haven't missed any questions here. You guys have been having a bunch come through, so I'm trying to stay on top of all those. Of course, now I lost my page. Is going to show me all of that stuff. All right, last minute questions come through. Yes, Hot Tub Time Machine Lugal. Gino, that was so funny. You know, for the longest time, I thought that movie was rather stupid. But then I just found myself laughing out loud at it. The second one is pretty dumb. Yes, Indigo, Bill is amazing. He is one of the most down-to-earth, humble guys. And I love how he's always like, I hate to sound negative here. It's like, be negative, man. It's okay to be negative. Yeah, thanks, Chelsea. I gotta... you have to understand that doing a pattern show is going to take me a lot of time and prep work to do. Because there's so many ways we can look at it. There's all the different chart patterns, but then I could sprinkle in candlesticks. I might split those into two separate shows. No, you don't use it at, Chris, you don't use it at Amazon. You use it, it's AF Training, aftraining.co. I'll put it back on the screen here for you guys. It's www.aftraining.co. If you go there and just go to shop, he's got a 3-book package. When you get to checkout, just type in my name and it'll drop it to $25 for you. All right. Let's see. What else we got? Last minute things. The market direction will probably be decided by earnings reports next week. Yes, I agree, Big Eb. I think that the earnings reports are really going to steer the sentiment out there, and I know that I don't know, but I'm pretty sure Amazon's going to have a total kick-ass move to the upside. I mean, earnings numbers-wise, because they're doing just tons of business. So we'll have to see how the other ones perform. Could be a crazy week. Steve says the iTunes podcast has no video. That's correct. iTunes is just audio. They want me to pay to put video on there, and I just, it's money, man. You know, right now I'm doing all this stuff for free, so I'm not going to start selling out more than I have to. It's just the audio. So tell your friends, if you got podcast friends, tell them to check out that podcast. If you like today's show, give me a thumbs up. That said, cheers, everybody. Have a fantastic weekend. I'm glad you joined me for our Friday sessions. As always, it's great. I'm going to go outside and go for a beautiful hike around the Back Bay in Newport Beach. Hope you guys have a fantastic weekend. Take care, everybody. I'll see you on Monday.